Now that you've studied the course, it's time to get some real examples. So in this video, I'm going to be back testing the European Euro against the Great British Pound, starting from middle ninth to current day. So now, on the chart right here, you can see this middle ninth right down here. Let's start off. So, the first thing you need to do is to look at the previous day. Previous day, which was middle 5th. You look back and as you can see, price went up. It's very obvious that price went up the previous day. So you come in on middle ninth looking for a sell, looking for a buy setup, I mean. But if you look closely, you can see that price gave us a reversal, a normal reversal setup, a normal sell reversal setup, I mean. If you can look, so you look at the previous day's low and high, which was the previous day's high was right up here. As you can see, price went up. Price went up right here. Changes to white. Price went up and then went down. But there's an exception I made, that if you notice that price did not bounce off of the previous day's high, but it came very close. It was about 20 pips away, but it came very close. So we count that as a reversal setup using this strategy. So we're looking for a short right here and look for the entry right down here. You can see the entry is right there at the first red downward facing bar. So you can see you get right here is the entry. The 30 pip stop loss, and price went for 38 pips. So we'll mark that down. Mark that as 38 pips. Now moving on to the next day. And if you look closely, you can see that price actually went up on middle 9th. So middle 10th, we come in the market and we're looking for a buy. And if you look very closely, you can see price did give us a normal buy setup, as price dropped below the Asian box right here and it went up. So we have a long position right here and have an entry right here at the first green bar right here. The entry was right there and price went up for 23 pips which would have given us a break-even trade. Since we break even at 20 pips, so this was a break-even trade. Let's break even. Right there. Now we're coming on the 11th of May. And if you look very closely again, you can see the price actually went down on May 10th. So May 11th, we're looking for a sell. And price did give us a sell setup. A normal sell setup was at that. So we go and we have a short. And the entry is right here. 30 pip stop loss, and price just came short of giving us 20 pips for a break-even trade. So this is a losing trade right here, unfortunately. So we have our first losing trade right here. So we count as a loss. Okay, moving on. Coming on middle 11th, no, middle 12th, I mean. And if you look close, you can see that on middle 11th, price went up. As you can see, price open on right around here and close up here. So we're looking for a buy setup for middle 12. But if you look closely, price gave us a reversal sell setup right here, which does not go along with our strategy. So this is a no trade. We mark that as a no trade. NT stands for no trade. Okay, now we're coming in on mid 13th, and if you look close, you can see that price went down on mid 12. So we're coming on mid 13 looking for a sell, and then price actually gave us a sell setup, in normal selling setup right here. Which is very clear. So we'll wait for our entry right around here at the first red bar on the histogram. So entry is right here. Look for a 30 pip stop loss, and price went for 43 pips. So we mark that down. Minus 43 pips. Now moving on to the next day, we have the 16th of May, which if you can look closely, you can see the price went down. Price came down on May 12th, so on May 16th. So on May 16th, we're looking for a sell, and we actually had a sell setup, a normal selling setup right here. You look, price went up above the Asian box, and then came down for sell setup right here. So look at our entry right around here on the MACD. 30 pip stop loss. If you look closely, we had a 1-to-4 risk to reward ratio right here. Let me just adjust it a little bit. So we had a 1-to-4 risk to reward ratio for 120 pips. So let's mark that down. $120 pips profit. Let's make some room. So we're coming on May 17th, and if you look closely on May 16th, I mean, price went down. So we're coming on May 17th looking for a sell, and we actually got a sell right here. We got an advanced selling setup right here. So let's look closely. Let's redraw the Asian box a bit clearer. So as you can see, price went down with the wick right here below the Asian box, and then came up back with this bullish candlestick right here, and then bounced off of the middle of the Asian box right here with this bearish candlestick. So we enter right after this bearish candlestick right here, the first bearish candlestick, which is an engulfing candlestick. You can see it's bigger than the bullish candlestick. So we enter right here for a shot. 30 pip stop loss. And you can see this trade would have given us how much? She would have given us 51 pips profit. Let's mark that down. $51 pips. Now we come in on May 18th, and this is another example of the trade that we just took. If you look, trade right here. Then another example of this trade where price didn't necessarily get up to the previous day's high or low, but it got close enough for a reversal trade. And in this case now price was just a little bit under 40 pips away. But we normally take this type of trade, and they're very profitable as well. So we have a long. Oh, let's jot the Asian box for clarity. You can see the Asian box right here, and you can see price drop below the Asian box with this wick and this bullish candlestick, and then went up for a buy setup, a reversal buy setup. So we look for entry right on the MACD right here on this bullish candlestick. So we have a long position, entry right here. $30 pips stop loss. And 45 pips profit. So we mark that down. $45 pips profit. Now we're coming on the 19th of May. We were looking for a buy setup because price went up the previous day. So we're coming looking for a buy setup, and price gave us a buy setup right here. But as you can see, for May 19, price kind of consolidated right here. There wasn't very much movement, but we still would have taken a trade. So we're looking for a buy, and we got a buy right here as price dropped below the Asian box and give us a buy right here. So 30 pip stop loss, and the highest point that price got to was right here, which was about 21 pips, which would have been a break even because we break even at 20 pips. So we mark it down as a break even. Okay, now we're coming on the 20th of May, where we would have been looking for a buy setup. As you can see, price kind of, well, it's not very clear, but price went up on May 19th. Let's get price. Did they open that right here and close right around up here? So price actually went up on May 19th. So we have come in on May 20th looking for a buy setup, and we got a buy setup right here. We got a normal buying setup. As you can see, price went down, dropped below the Asian box, and went off up by entry right here. 30 pips stop loss. And as you can see, price did not give us not even a break even trade. Price didn't even give us a break even trade here. So it would have been a loss. count as a loss, 30 pip loss. And this is another rule. Once you take a trade, it doesn't matter if it hit profit or if it hit your stop loss. You take the trade, get the result, and you're done for the day. Do not trade that pair again until the next day. That's a rule. Okay, now the last day, which is May the 23rd. As you can see, this is another case of the reversal trade, but a little bit different. Okay, the previous day's low, which was the low of the 20th, we've been right around here. It's kind of crooked, right? Okay, we've been right around here. And as you can see, price gave us a reversal by setup. And I know this is a lot different. I know this is a lot different than the ones I showed you before, but we take these trades right here, where the previous day's low or the previous day's high falls right within the entry. Right here, right within the entry of the reversal. See, right around here. If the previous day's low was instead right up here, this wouldn't have been a trade because it's too far from the entry. If it was right here, then it would have been an entry because it's very close. Even if it was somewhere down here, it still would have been an entry because it's very close. If it was all the way down here now, like this, then it wouldn't have been an entry because it's too far. And if it was all the way up here or above the Asian session box right here, it wouldn't have been an entry. But just because it fall right within the Asian box and the entry, it's a reversal buy. So we take that. So long position, entry is right here, 30 pip stop loss. And as you can see, price went up for 62 pips. So we mark that down. Okay, and that brings us to the end. As you can see, we got 2 losses, so 2 losing trades. I think it's 2 break-even trades and 1 no trade, which was just one trade with no setup, and the rest was profit. So let's calculate the win rate. And how I normally calculate the win rate, I do not include the break-even trades or the no trades. I only include the wins and the losses. So within 11 trades taken, so we gotta subtract 1, 2, 3, 4. So we subtract the 4, we have 7 trades. So we calculate our win rate based around 7 trades. Let's put the calculator. So for 7 trades, we won 1, 2, 3, 4, 5, 6. No, it can be 6. 1, 2, 3, 4, 5, 6. 1, 2. How many trades was this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so we have six wins and 2 losses. Let's calculate that. That's 8 trades. So we have 6 multiplied by 100 divided by 8, which is 75%. So based around these trades I took, there's a 75% win rate, excluding the break evens and no trades. So 75% win rate. So let's calculate how many pips that would have been. So we have 38 plus 43 plus 120 plus 51 plus 45 plus 62. Yeah. So we have 359 pips. And we have 2 losses right here, which comes up to 60 pips. 60 pips loss. So we subtract 60 from 359. And we get 299 pips profit. So within this within this period right here, we would have profited 299 pips of profit. We would have profited 299 pips. And at a standard lot size, that would have been $2,990 profit, just off of one pair within a short period, just like that. And based around how I trade up to 9 different currency pairs. So this number adds up a lot, to be way over 1,000 pips a month. Way over that. So that brings us to the end of this video. I hope you learned something. And if you were lost anywhere in this video, make sure to rewatch the course and then come back to this video again and do your own practice on this side, so you can become profitable. And I'm out.